Hello and welcome to today's daily education here at Forex.Academy. I am, of course, your host, Robert Blackwell. I have the pleasure to walk you through today's daily education. Before we do so, let us consult the following disclaimer. There is risk involved trading in financial markets. And the content of today's particular webinar will be discussing trading limit orders, and it's going to be a practical demonstration, actually, getting involved trading the markets with limit orders more specifically. So let us consult our JFX trading platform on screen then, and let us discuss then, the main benefits. What are the main benefits, evidently, of trading limit orders? Well, of course, you can choose the price you'd like to trade a market at. Okay, so that's one of the main benefits here to trading limit orders. So let's say perhaps we'll do some early technical analysis on some of these charts here and see if we can place some trades as according to limit orders. So we have the NASDAQ 100 here, which is the tech-heavy index there in the United States. If we zoom out on the price action, we can see that, well, it's breaking up towards new highs. So with today's price action, with today's candlestick here, we could suggest certainly we've missed the boat on this trade. So perhaps if we use some technical analysis right here, we could suggest, well, let's input a resistance order here, or a support level, which is now broke resistance there a few days ago. This what was a resistance, I suppose, ceiling in the market is now a floor. And we could have bought that market today. Of course, it's trading up. So let's say we do believe in this level of support and resistance. However, for whatever reason, if the market shows a little bit of volatility, it might trade down, and let us get into this market again at a specific price. Okay, so again, with this level of support and resistance, we'll choose this price at 6,849. That's literally the price at support and resistance, and I'll just show you here at this point in time. Okay, so if that is our trade suggestion, again, the market is trading to the upside again today, so we may be a bit annoyed at that. We wanted to buy it this morning perhaps, but we didn't get the trade off for whatever reason. We weren't sure if it was going to reverse, but we now believe strongly in the support level. So what I'll do is just delete this support resistance level and say, okay, 6,850 is the price we actually want to be long this market. Now the market is now at 6,925 and trading up. However, if we see some volatility mid-evening, or of course tomorrow morning, that just sends this market down to the downside, of course, we still want to be long the market, but we're going to try and execute our long trade at a better price. So what we'll do is go to new order. We'll go and choose our volume, and we'll just leave it now for 0.01. We'll change market execution to pending order. And instead of actually using a stop or any of these other sell stops, of course, we'll choose a buy limit. Now the buy limit actually lets us buy the market below the market price. It's effectively what it does. And we will put our input price into this market. So 6,850. And we only want to buy a 0.01 lot at that price. So that's absolutely fine. We place that order, and on screen our order is now executed. Now effectively, what does that mean for us, guys? Well, we're not actually in the trade position at this time. We're not actually in the trade, and we can just verify that by opening up our terminal here, and we can see that we have no current trades on at the moment, but we have one order, which is just a simple order, again, with no profit, because we haven't actually entered the market as of yet. What we are hoping to do is enter the market at this price, 6,850, if the market trades down and collects our order, so that we can get long at a much better price. This is our price here, so you can just monitor this trade as such. Okay, but do be aware there are disadvantages to this as well. If the market shows some inconsistency and looks to trade to the downside, obviously you're going against the momentum if this market turns around and trades down. So do be aware of what market you're trading and the disadvantages to actually trading these by limit orders. Let's move across to another market. Perhaps we have the US dollar against the yen. Now we know the dollar is strong at the moment. Let's say against the yen in particular, it doesn't really look like it wants to trade up past these new highs. What we could do again is just consult our relative last high. So if we put a resistance level up here as a new high, Let's say we think the market might trade up to this level and actually show a false breakout and turn to the downside. What we can do is sell this level if we think that is the case. And we use the same initiative to actually use a sell limit order because the market isn't at that price. We're not looking to continue the momentum to the upside. So we'll go to new order. We'll go to market execution, pending order. And then this time we'll choose a sell limit. Again, selling the market at a higher price that hasn't been realized yet. And we'll choose our price of 110.97. We'll place that order. Oh, sorry, that is not our stop loss there. So it's actually just here at price. Just remove that for now. And there is effectively our sell limit order. So there you can see, guys, we have entered two possible trading executed trades. Now they're not ongoing trades, they're not open positions as of yet. However, what needs to happen is the market needs to trade up or down to a certain level to a price that we are happy with so that we can trade this market. Okay, so again, we're looking to sell the market if the market trades up. So what could happen in this market is specifically we see that the dollar stops moving to the upside. Again, it's showing some weakness against this currency pair. And I'll just zoom in and push on to more relative price action. What could happen is, of course, the market breaks with a breakout. The market reverses in that candlestick, but we get short in the trade, and then we're looking to get the best possible price that we can get to sell this market. So again, there are very different disadvantages and advantages to using either buy stops and sell stops. However, one of the main benefits is, of course, you choose effectively the price you want to sell or buy the market at. And of course, if the market does not trade that price and you're not happy with the trade, well, of course, the trade will not be executed, okay? So that's effectively how to trade using your limit orders, of course, with a long limit order with the NASDAQ there, and of course, with a short limit order there. And of course, what you can do then, if you're unhappy with the possible selections, you can simply cancel the trades before they actually get executed. Again, you're reading the price action, you're studying how the markets are moving, and then you're adjusting your trades as is. So that brings us to the end of our daily educational video here at Forex Academy. Thank you very much for joining us. We'll see you next time. Bye for now.